Okay, welcome back from the Silver Summit. Big Al is chatting with his old friend David Morgan. David, how long have we known each other? It's been a while. 12 years?
A decade or so, something like that.
Yeah, long time. David is definitely our go-to guy for silver. He has been around a long time. David got me involved, Kathy and I guess I should say involved in buying silver down at the $14 level when we started to buy it in size, I guess you might say, and we bought it from somebody who you recommended. So, been a good deal, to say the least. Hey, Dave, you and I were chatting about the manipulation theory, GATA, the Jeff Christian side of the story, et cetera, and you and I think, kind of fall somewhere in the middle of both of those guys. You maintain, as I do, but I'd like you to explain it, that in terms of long-term trends, manipulation's not going to work there. But in terms of short-term events, sure. I mean, just by a major trade could have an impact on the price of silver. Can you elaborate a little bit on that for us?
In fact, Al, I think the first time I did it in a real public forum was at the Silver Summit 2 years ago, and you were actually the moderator of that. And I think there were 4 people. It was myself, Jeff Christian, Bill Murphy, Roger Wygand, and there might have been a 5th, I don't recall, but there were those 4. And you asked the question, is the market manipulated? And Jeff Christian stood up and said, if any of my guys raise their hand, yes, you're fired. And he said, no, it's not. And then Murphy said yes, and then it was my turn, and I said, well, I'm sitting in the middle, and I'm in the middle. I go, you cannot possibly manipulate the long-term trend. The free market forces, as big or as little as they are, do exist still, even in a manipulated market, and the overall trend is up for both gold and silver. But within that trend, all markets move really on one thing and one thing only. Every time I'm interviewed on CNBC or BNN or one of these outfits, they ask me, well, why did the price of silver go up? And it's like, because, Bernanke said this or QE2 was announced or whatever. That may hold some weight, but the honest-to-God answer is there's more buying pressure than selling pressure, and that's why it went up. And unless you ask each individual what their individual decision was, you don't know the real reason why it went up. All you know is there's more buying pressure.
But purely and simply, when you talk about the Bernanke's actions, you talk about QE2, QE3, QE27, whatever, those are all short-term events.
Right. So coming back on point, on February 29th of this year, there were 500 million ounces of silver sold in a matter of seconds, and that took the price of silver down tremendously. And my contention is that manipulation is yes, because anyone that's sophisticated in the markets knows exactly what will happen with that kind of volume in that short a period of time, and they know that the price is going to mark down substantially. They don't know to the penny, but they got a pretty good idea. So someone that's going to benefit from that event, or someone's is probably more accurate, trigger those events. And you could go into who, where, when, and why, but I'm really not interested in that. Objectively, it was a takedown of the market. It was deliberate, and the reasons for it we could argue all day. Conversely, if you look at the uptrend before that takedown, you see the market in silver go from roughly the $30 level to $48 level on huge volume. So again, it proves the point. Large volume buying moves it up. Large volume on selling moves it down. And there are entities out there that want the price to be marked down in gold and silver from time to time. And there's a lot of information that you can dig out if you're willing to do the research. The one point I'll make, the Working Group on Financial Markets does exist. It's the Secretary of the Treasury, it's the Fed, it's the President. I mean, it's the top of the elite that have the ability by law to come in and manipulate markets whenever they darn well choose. So for people to say that there isn't any, they ought to just do a little bit of research. Look at the Working Group on Financial Markets, read it, and understand, yes, they have the authority to do so, and yes, they do it. Do they do it daily, every trade? No, of course not.
Okay, but here's the interesting question. In some cases, I would maintain that their actions are almost necessary given the tenuous nature of our economy. I mean, you have a couple of major down days in the conventional market, and I could argue it would be game over, simply because of the psychological impact, Dave.
That's a real tough one for me to answer, Al. I mean, trying to be a purist and objective. I see your point. But yet what you're doing as an analogy is like it's when you tell that white lie. and then you have to lie on top of that to keep it going. Then it gets a bigger lie and a bigger lie and a bigger lie, because basically we're living a lie. You cannot print wealth.
Of course we're living a lie.
Yeah,
I mean,
and that's the problem. So when do you admit it? Do you admit it when the damage would just, wipe out, this many people, or do you let the lie get so big that when the truth finally comes out, it wipes out everybody? I mean, that's the point I would like you to think about. I personally have thought about this a great deal. I'm not certain, but I think at this point, I'd rather just see the truth come out and let the cards fall where they may. I mean, people in this audience know they've protected themselves to some level with precious metals, and when this house of cards comes down, it's not going to be a pretty event.
I agree 100% with you, but the fact of the matter is, from a practical standpoint, and I want to stress this, I agree with you. I'm on record on our show, I'm on record at various conferences as saying the house needs to be rebuilt. I firmly believe that, and ultimately it will. But if people are of a mind that they want to kind of, they want to drag this thing out, they don't want to have tremendous economic and social, quite frankly, suffering, then I think one could argue that, the organization that you're talking about has, that they have a valid action. Is it a correct action? Not in my mind, but I think in terms of for the goodness of everybody, short term, it might make sense.
Well, in a way, but again, my argument would be this. You're looking for an easier, softer way. It's like, okay, let me just transition this. We'll pretend the system is okay. We'll prop it up. We'll do the bubble gum and baling wire. We'll keep it going until we get our way out of this. And if you study history as long as I have, I'm not saying you haven't, but I've looked at it hard and deep. And nothing starts fresh without a complete collapse.
Of course not.
And so this is the problem. It's when do you take, and the markets are smarter than any government official. They're smarter than the working group on financial markets. The market is the market. And so it could happen a day after tomorrow. I'm not predicting that, folks. Or it could take a lot longer than that. I'm sure it's going to be longer than that. But the point is, it will happen. And how it occurs, no one can predict exactly. There'll be pockets that probably relatively unscathed, and there'll be areas that will be devastated.
Dave, I have to tell you, I had an interesting conversation. I was after the panel yesterday. I was walking across the lobby, and a number of our listeners stopped me, and husband and wife in particular, and the husband said, "Do you really think that this thing is going to come crashing down? Is that why you and your wife are buying gold and silver, etc.? Because you think this major crash is imminent, for lack of better terms?" And the thing that I said, and I'm pretty sure you would agree with me on this, and that is, you got to use common sense. You have to get ready for any eventuality, for lack of better terms. And that's, as I explained to him, I'm not going to put all my eggs in one basket, because there are various things that could happen in my lifetime, and consequently, I think diversification is clearly the best way to go.
Well, the best study on the subject, there's several, but is Ibbotson and Associates. They're very objective, one of the best research firms out of Chicago. Their number's 15%. I've been saying 10%,
yeah.
And then I said 20% if you're really worried, and you don't need more than that.
You know what? We've got some common sense here. I agree with you 1,000%. And, in terms of our listeners who are 100% invested in silver or 100% invested in gold, we've got a really active blog, 2.5 million people on it over the past year, documented. And I have to tell you, my response to these people, and they think I'm nuts, but my response is, come on, you got to diversify in our business. You know what else you have to do in our business? You got to listen to what David Morgan has to say. We've had a banner for David's website on our site probably for the last 10 years or so. David has an excellent service. David is a very, very bright individual. Get numerous comments about him on our blog. Fortunately for me, because I really like the guy, most of the comments are very, very positive. But you know what? It's a pleasure to have David on the show. We get him on about once a month or so. He's a very, very bright man. Check out his website. He's the best in the business, in my opinion, when it comes to silver. Dave, thanks so much.